Ashok Vada, who's Group CEO of Ambit Holdings, joins us on the show right now with his market perspective. Ashok, it's great to have you on the show. A lot has happened over the last 10 days, actually more immediate than that, last 5 days even now. What is your sense of things right now?
Well, I think the week began with positive news from Europe that Greece was going to retain its position as a part of the European Union. And I'm not sure whether this is a permanent resolution. As a matter of fact, I'm quite sure that this is not a permanent resolution for the European crisis, but certainly at this stage, the first big hurdle seems to have been overcome. And then, of course, we had the RBI deciding to stay put and not make any reduction either in CRR or in SLR or in repo rate. So that came as a bit of a surprise to everybody. And, you know, as I said at some other point to somebody, you know, the market is in one of those situations where anything neutral is also considered negative. So really, for the market to react positively in this environment, something constructive, positive, something significant has to happen. And clearly we saw how the market read that no cut as bad news, and you know, which is unfortunate. My own view is that where we sit right now, we continue to be in a volatile situation. I think uncertainty is certainly constant in our life today, and we need to learn to cope with that.
The deal, Ashok, and it's great having you as we continue our celebrations of our 3rd anniversary. So I also take the time to thank you for joining in. But the deal, Ashok, is how our markets are shrugging off all the bad news. If indeed the rate cut was perceived to be a bad news, it probably lasted only for one afternoon, and then the market is back to doing what it is doing. So maybe a day or two of bad news, a day or two of weakness, but otherwise we're doing very well. You think we are poised for higher levels despite the news flow that is surrounding us over the next, say, maybe 3 months?
Well, I think the market is tending to behave, I have to confess, in a relatively uncertain and irrational manner, as I said. Nothing big happens, and yet you see a movement upwards, and you know, even small things are tending to move the market downwards at this point of time. I think the next few events, including the meet of the European Union and how the European Union reacts to putting in more liquidity into the system, are going to be some key determinants in terms of money flows and therefore movement in the market. I recognize that post that unfortunate downturn in the market after the RBI announcements, it has picked up. And again, that's the point I'm trying to make, that, you know, it's very, very difficult to read this market because it's completely volatile and very uncertain, I have to say.
So what's the base case scenario, Ashok? I mean, how do you believe, let's not talk about the next 3 months. Let's talk about, say, maybe December 2012 or possibly even March 2013, which will have 2 or 3 quarters of further earnings priced in. What's your base case? Do you believe will be higher than where we are right now? And what would lead the index higher or lower from the major index components?
You know, the consumption story continues to regain strength, and I would like to believe that should it continue to move positively over the next few quarters, that engine is clearly substantial from where the market is and where the market can go. I hope that something happens to kickstart the investment cycle, whether it is the Prime Minister taking on the responsibility of the finance function temporarily, or indeed the PMO taking more direct interest in some of the important decisions related to starting off the investment cycle. But I think it's extremely important to create a more positive environment that encourages our local industry to kickstart the investment cycle and start investing in capacity. And I would argue that should that happen, and the chances as I see today of that happening are certainly more than as I saw it 2 months ago, I would say the market is certainly poised to move upwards. My own sense is that unless something dramatic happens or there's a complete political collapse, which hopefully won't happen, I see the market from here only moving upwards. Very difficult to say the range within which it will move, but I would say that it will certainly climb slowly, although I'm aware that there are contrarians who believe that the climb could be steep and not slow.
Right. What would, and since you do not, buy that theory, however, given that you expect the market to move higher from here, what sectors would lead the rally or be the early movers really for that kind of an up move?
So we've seen the good and well-run companies sustaining themselves, and I would say more than the sectors in an environment of uncertainty, which is where we sit today. It's the governance standards, it's the transparency, it's the historical track record of companies on disclosures and accounting policies that are really going to determine those that move up faster. At times like this, as I said, when there is uncertainty, the tendency is to go and invest not necessarily in sectors, but in companies where people find adequate amount of comfort and trust. And I think these important characteristics will determine the winners certainly from here onwards. If I had to choose some sectors, I would say everything that supports consumption, whether it is FMCG, whether it is pharma, whether it is even media and entertainment to some extent, are sectors that will continue to move up. If the investment cycle kicks out, and I think there is greater focus and incentive to invest, I would say at some stage our infrastructure service businesses have to show a growth. You can't be such an important constituent of both the capital markets, but more important of the economy, and not be doing well. So I would say that at some stage between now and the next 6 months, that sector has to regain some of its old glory.
Right. Just one more aspect. Since you're talking about the market perhaps seeing a reversal from here, what would lead to that turning point? Do you think there would be perhaps a key global or local event that could get the market out of this volatile range, or would it be primarily liquidity driven, assuming that there could be reallocations at a global level for funds?
I would like to believe that there will be greater liquidity that will be pushed into the market, and therefore at least in the short term, liquidity will drive the markets upwards, whether it is pure liquidity or whether it is liquidity backed up with some reallocations. One way or the other, that's going to be a driver over the next 3 months. But if I look at it from a more medium or long-term perspective, I don't think it's just liquidity. I think the macroeconomic factors have to play an important role. And there I would say the uncertainty in Europe, which in my opinion is here to stay for a longish period of time, will continue to be an overhang. And so long as the European crisis continues to be an overhang, and as I said, in my opinion, it will be there for a long time, that uncertainty isn't going away. It's almost a part of our living life in the medium term. Local situation, of course, can be helped. Policy decision making, whether it is related to power projects, whether it is related to infrastructure, whether it is related to government taking concrete steps in fiscal consolidation, I think all of those are important steps. I think what we need to see from a local perspective is that the government has got its arm around the problem, and that it is both prepared to and takes important decisions. It doesn't matter how small the decisions are, but I think right now everybody is looking to the government and saying we need decisiveness, we need clear policy making, and we need some quick announcements here.
Ashok, a small glimmer maybe, if at all, for what I thought was a small glimmer for some cap good companies was the talk today of L&T and a couple of other companies being in a race for a very large defense order. And traditionally we've seen a lot of these orders go to companies which have catered these orders from companies outside. Now maybe local companies might get a flavor of that in a much larger proportion than what was. At least that's what the feeling I got after talking to the management. What's your sense? I mean, you think that this could open up a new window of opportunity for large, mid-sized players, defense coming into local players in India?
I think it's a very interesting way for the government expenditure to kind of kickstart the whole slowdown in the economy. We do know that the allocations towards defense are huge. We also know that a large part of that expenditure is incurred not necessarily in India. If the government was to decide that there is adequate confidence and capability within the Indian corporates, when it comes to defense, you certainly can't compromise that. But if the government was to decide that we have adequate capability, I think giving those orders out in India would be a great way for government to kickstart both a positive decision-making process as well as its own expenditure program locally.
Ashok Wadhwa, the other bit is, I just wanted to ask you, you did mention that you believe consumption-related themes would probably do well over the next 6 to 9 months. If we just map the data of how we've done from December till now, consumption, some of these high-flying names like a Jubilant Foodworks, for example, or whatever, essentially the consumption theme is maybe 10 to 15% below the kind of valuations that they were trading at, and the distressed names are 15 to 20% higher than the levels that they were trading at. The next 6 months, you believe there could be a reversal of sorts, or everything will essentially go up? The rising tide will carry all boats.
Obviously those that are at a relatively lower base are bound to move up significantly faster than those that have sustained and been a part of the growth process even in difficult times over the last 6 or 9 months. So I would certainly say that if the decision making and government expenditure and the investment cycle was to move up, clearly the laggards in infrastructure service industries, infrastructure project businesses would all move up faster than the consumption businesses. But I would say that it is unlikely that in the short term or the medium term the consumption story is going to fall off the cliff, and therefore I would say that there is sustenance for those companies and businesses for sure.